This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another fresh new edition of Bazaar Morning Call. It's the start of a new week. Monday morning, we are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Good morning, guys.
Hi, good morning. Morning, Nigel. Well, looks like the market is on the cusp of some sort of a decisive breakout on the upside. And all the ingredients are perhaps in place?
Well, indeed, smelling fresh all-time high. So let's see whether or not this is the week, right? We've been long waiting for it.
You know, on Friday, I was thinking you were on Editors Roundtable, you were talking about IPL. Which team are you supporting?
Yeah.
What happened to that?
Mumbai Indians didn't make it.
I think the tournament just did not want to get over, right? I mean, so one more day.
One more day, this evening.
We will find out who the winner there is. But as you guys have been saying, there is unfinished business, right, on the upside. And, you know, the market gave us a taste of that on Friday, and I think that's where we need to begin. By the way, Friday was a very strong session, but over the weekend is when we got the real news. An in-principle deal to solve the debt ceiling crisis has been reached between the Republicans and the White House, the administration, basically. Now, this is an in-principle deal. We have the rough contours of what has been agreed upon. I mean, non-defense spending, for example, will stay at these levels. This is, the entire thing is now being pushed to 2025, beyond, you know, the next elections. And this is going to be a very good news if this gets passed. And that is what markets are waiting and watching out for. You know, so the expectation is that the U.S. Congress will vote on this deal on Wednesday, this Wednesday. Now, the reason why this is important is because, you know, the House is controlled by the Republicans, the Senate is controlled by the Democrats, and both need to agree, both need to sign this off. This is an agreement between the House leader and the president, but the parliament needs to approve in the U.S., and that's basically the reason why markets are still tentative. I mean, actually, you know, U.S. futures are higher, but there's nothing, I mean, it's not a ripper of a rally or anything. Asian markets, the last I checked, were a little mixed, a little higher, a little lower, but all over the place. So this needs to go through, and I think then we perhaps start to get a real kind of reaction. Now, the market here, as I said, saw follow-on buying on Friday, follow-on from the previous session. The Nifty ended about 1% higher. We come to levels then. Watch for a close above 18,565. I mean, a close higher perhaps takes you one step closer to the all-time high of 18,887. Actually, I mean, I'm nitpicking. You've got not very much distance between where we left off on Friday and the all-time high. If you're trading, these levels are important. So 18,565 becomes important. On the way down, the 20-day moving average, the evergreen sort of level there, that comes into play. We've put a fair bit of distance, 250-point distance between where the 20 now is and where the closing on Friday was. That stands at 18,252. Twice in the last 2.5 weeks, the Nifty is bounced in a very clean, powerful way off that level. So that is the support on the way down. On the Bank Nifty, watch for a close above the 44,151 level, which is, of course, the all-time high. And then, I mean, if you're able to do that, you know, you basically target 44,800 kind of levels. You'll project extension levels higher than above the previous all-time high, but we'll talk about that when we get to it. On the Bank Nifty, we're about 150 points away from Friday's close to that new all-time high. On the way down, the 20-day moving average for the Bank Nifty stands at 43,597, which should not be broken in any reversals, etc. But, I mean, you know, U.S. markets up about 1.5%, 2%. NASDAQ, for example, on Friday was up 2%. And then over the weekend, we got this debt deal, etc. So, I mean, maybe U.S. futures, when you look at it, perhaps they're not doing very much also because you got a fair bit of action, which was priced in expectations of something happening over the weekend on Friday itself. But SGX up on your screen, we're up about 0.8%, 162 points higher. We'll see if these gains hold all the way to market opening by 9:15 or we pair some of this off. Sonia.
Oh, absolutely. I mean, the energy is palpable, right? The SGX Nifty is indicating a big bang opening this morning. And as you said, I mean, this is, of course, a market that has been building on to its gains. And now we've reached a stage where the Nifty is at the cusp of breaking above the trading range. We almost closed at that 18,400 level on Friday. And there are a lot of indicators that the market could perhaps not just break out of the range, but sustain over there. Remember, the Nifty is now less than 400 points away from an all-time high of 18,887. So the momentum is intact. In the last 1 month alone, the Nifty has gained about 2% odd. And a lot of the pieces of the puzzle are now fitting in. So once again, foreign and domestic investors have bought in the cash markets. In fact, on Friday, you saw FIs buy about 350 crores, DIs buy almost to the tune of 1,900 crores. And global markets have been very upbeat. In fact, as we speak, markets like the Nikkei are up almost 500 points. This is after there is some degree of certainty on the debt ceiling issue being resolved. And that has given, a new set of wings, a fresh set of wings to global markets. Nasdaq, in fact, has ended the week with the 5th straight week of gains last week. So things have been pretty good over there. In our own markets, it is the last leg of the earnings season. So a couple of data points. ONGC's numbers were on the weaker side. Aurobindo Pharma saw profits fall about 8% or so. ICICI Lombard will be in focus as ICICI Bank will be hiking its stake in the company to over 50% before the month of September. So a lot of individual stocks in focus. But I think today, all the limelight is going to be stolen by the headline index and big bang opening from the SGX Nifty. But important to see if that sustains, because, this is a market that has already seen buy on dips and building on to its gains. Perhaps a lot of the easy money has already been made.
Well, that's right. Sonia, you couldn't ask for a better close to the week and couldn't ask for a better start to a new series. We had a solid close on Friday's trading session, both on the Nifty and towards the end of the trading session, the Nifty Bank as well, that did participate. As we have been saying, the Nifty is within kissing distance now of fresh all-time highs. But there's no change in trend. But given that the SGX Nifty is suggesting such a big gap up, maybe taking some money off the table would not be such a bad idea for a day trade. If you had a long position, taking some money off the table on the index itself will not be such a bad idea. Let's run you through a couple of cues. Institutional flows, well, the FIs, they've sold just once in the last 22 sessions or in the last 1 month or so. So that's telling you the kind of flows we've seen from the FIs. The DI flows, well, that was heartening in Friday's trading session. They pumped in 1,850 crores odd. That's the best we have seen in FY24 so far. So the DIs were the reason that, in fact, we saw those big institutional buy number in Friday's trading session. What did the FIs do in the FNO market? Well, they added long positions. They continue to remain net long on the index. On the option side, well, they wrote more puts than calls. More than 2.5 lakh puts is what they wrote. And two strikes were very active, 18,400, 18,500 put. Between them, there was more than 1.1 crore shares that were added. So that's telling you there is a fair bit of writing. The support now, going by the options data, given that 18,400 put was active, premium at around 50 rupees, 18,350, 18,410, 420 odd becomes that important support zone for the bulls to hold on. But will it be a good idea to take some money off the table? I think maybe yes. And I'll tell you why. Three broad reasons that I'm putting up. The PCR has moved to the upper end of the band. It's moved to around 1.37 or thereabouts. Normally, when it goes to around this 1.4, we see a temporary pullback. So that's point number one. Second factor is the dollar index continues to remain elevated at around 104.2. And the third factor is, I was looking at the probability of Fed hikes, and there's a Fed tracker out there. Earlier, it was in mid-teens, whether or not, the past week that is, whether we get a 25 basis point rate hike or not. That doubled to around 35%, and now the probability of a rate hike coming from the Fed has moved to around 70%. So, that earlier we were factoring in that maybe we'll see a pause. Now the probability is higher that you see a rate hike. The SGX Nifty suggesting a gap up. There's no change in trend. You can continue to remain long, but if you get this sort of a gap up, maybe taking some money off the table on the index could be a good strategy. Prashant.
Well, Nigel, you're absolutely right. I mean, expectations of rate hikes have been being consistently priced back in, and it's been quite incredible. Yeah,
I think it was 17% the previous week. It moved to around 35% on Wednesday, Thursday, and now it's at around 70%, the probability of it going up. So
it's been consistent. For the last year, we get markets get all excited that rate hikes are done, rate cuts are coming, and then you start to slowly price those hikes back in, and that's happened this time around as well. Before we get any further, let's quickly tell you what's lined up in the first half hour of the day. We have the global setup with Ed Yardeni of Yardeni Research in just a bit as that conversation comes up. Then we'll, of course, focus on the top 10 stocks to watch with our research team. And our market guest today is Prakash Diwan, who will weigh in on some of the results which we have gotten over the weekend. Stay with us.
Okay, let's kickstart the show. Then we have a lot of opinion coming through for you in the next 2.5 hours. And we kick it off with Gautam Dugar of Motilal Oswal Financial Services, who expects the markets to be range-bound with a positive bias. He says the Nifty is likely to break out of the 18,500 resistance zone. Earnings season ended largely in line with expectations led by the BFSI and the auto segment. They like financials, large-cap tech stocks and select real estate names, while they continue to be bullish on names like ITC and M&M post-earnings.
Well, let's get you some money market views as well. So on the rupee, B. Prasanna of ICICI Bank says US dollar remained on strong footing as hotter than expected inflation and jobs data repriced the terminal rate and pushed up the front end of the yield curve. Risk sentiment improved on expectations of a deal regarding the debt ceiling early this week. In Asia, while the Chinese yuan depreciation pressured the currencies, rupee was supported by RBI intervention. The rupee, backed by better macro fundamentals and inflows, will continue to outperform its peers in the medium term. This week, Prasanna expects the rupee to trade between 82.2 to 82.9 to a dollar range, with RBI smoothing out the volatility.
All right, and on the bonds, V. Prasanna of ICICI Bank says globally yields continue to harden as uncertainty loomed around the debt ceiling hike and stronger economic prints, leading to increasing expectations of one more hike by the Federal Reserve. Domestic bonds remain supported owing to strong real money demand and expectations of inflation undershooting RBI's projection. He expects bonds to remain range-bound with the Indian 10-year benchmark to trade within a 6.9 to 7.05 range.
Well, we have a lot of news flow over the weekend, both results and some stock-specific action as well. So let's run you through the list before we get to our special top 10 segment. We're looking at Auto Pharma, ICICI Lombard and PFC. There's stocks on the back of positive news flow, while on the flip side, you have ONGC, Sun Pharma, BHEL, Karnataka Bank, City Union Bank, TCI Express and Sundaram Finance that could be reacting to negative news flow.
All right, well, the big headline in the last 24 to 48 hours, in case you missed it, is that US lawmakers have reached a bipartisan debt ceiling deal. And we have a view coming in from Seth Seifman of JP Morgan. He says while the outline of this deal is more specific than what has been seen in the past, one cannot take for granted that Congress will approve it as currently reported. In addition, he says work requirements for federal safety net programs appear to remain a sticking point as well. According to JP Morgan, at this point, the major risk would be Republican resistance, since a deal that punts fiscal issues beyond the 2024 election while sacrificing little in the way of realistic potential domestic spending seems a highly favorable outcome for the administration.
Okay, I mean, so yeah, it needs to be voted on, but if this goes through, I mean, you basically push the sort of fiscal can down the road, and I mean, at least till that point, it's not bad news at all for markets. Ed Yardeni is president at Yardeni Research. He's joining us now to take some questions. Ed, good to have you with us here. Should this pass, first of all, do you think, I mean, there'll be any problem in getting this through the US Congress, one? And if it were to be the case, will it spark a risk-on rally, or it'll all be priced in by the time we get to it?
All great questions. Look, I think that a deal is going to get passed by Congress. I never anticipated that we'd have a problem. I thought it would be a last-minute kind of situation, which is what it was. I think the stock market really hasn't been all that worried about it, quite honestly. I mean, look, the market's been actually going up pretty nicely in the past few weeks, and notwithstanding concerns that there could be a terrible default crisis, which is not going to happen, and I never thought would happen. So I don't know that there could be like for, a morning kind of trade situation, a move to the upside, but I think a lot of the good news was already anticipated by the markets. The markets have seen this play before, and it's turning out to work out the way it has in the past.
Ed, hi, good morning. Given everything, the Indian markets have really, rallied quite a bit. In fact, this year now we're hardly 2% away from all-time highs yet again. We also have some big cues coming up. Of course, there's the rate cycle, but apart from that, we are heading into an election year in 2024, and generally when that happens, markets sort of, see a lot of the gains being priced in 6 months in advance, whether it's in infrastructure, capital goods, etc. How are you feeling about India now, and what is your prognosis?
Well, when I look around the world, India still looks as though it has a lot going for it. The Chinese economy isn't doing as well as people had been anticipating coming out of the lockdowns that they had imposed on their people. There was an anticipation that there would be a lot of pent-up demand. And yet what we're seeing is the price of copper, which is very sensitive to developments in China, remains weak. I think the property market remains in trouble over there. Meanwhile, the Cold War, hot war situation between the West and China, between the West and Russia, these Cold Wars have been pretty hot. They've been extremely hot, of course, in the Ukraine, which is a proxy war really between the West and Russia. And so from that perspective, there's a lot of pressure to put supply chains in areas of the world that are viewed as relatively stable and secure. And India certainly stands out in that regard. So the geopolitical situation is favoring India with regards to foreign investors. And I don't mean just foreign investors into the stock market. I mean direct investments, companies actually investing in India.
All right. Good morning, Mr. Yardeni. The other point is everyone was looking forward to this debt ceiling deal being reached. And as you said, maybe a majority of the good news is in the price. But the problem, I think, for equity markets is from not anticipating any rate hike or considering it as a distinct possibility, now there's a high probability that we get another rate hike coming from the Fed. What's your sense? We get the rate hike and then they pause?
I think you're right. I mean, now that the debt ceiling issue is very likely to be behind us, assuming that Congress passes it this week, we'll move on to other things to worry about, and the Fed will be back in focus. The markets, I think, are discounting a 25 basis point increase in the Fed funds rate sometime over the next two meetings. I think the Fed will pass on raising the Fed funds rate at the next meeting. They could very well do it at the following meeting, but it's my view that the Fed is done. I think inflation is continuing to moderate. I think that the U.S. economy is growing, but at a slow pace. The big issue is the banking crisis. We've been very lucky that the banking crisis hasn't become an economy-wide credit crunch and a recession. And I don't think the Fed wants to really push the limits of what the financial markets can withstand in terms of high interest rates. I mean, we are in restrictive territory with regards to the Fed funds rate, as evidenced by the banking crisis. So I haven't given up on the notion that the Fed's going to pause for a while, for a long while perhaps, and that we may not get further rate increases this year.
Okay. And you've kind of held that view for a while that, they're looking at backward sort of data, and for all practical purposes, they should be done. Whether they're actually done or not, we'll see, but a pause is coming. But in any case, we will, it's also your view that we will hold on to these, 5, 5.25, 5.5 kind of levels of the Fed funds for some time, Ed? I mean, maybe.
I think so.
Yeah.
Yeah, I think the Fed in the past, interest rates went up and then they came down pretty quickly. This time around, I think the Fed is trying to find a level that's restrictive enough without causing a recession to bring inflation down. And I think they're at that point right now. I hope they don't get impatient. They've said that they want to get to their 2% inflation target, not by this year, not by next year, but by 2025. And I think they're exactly on the right course for that. And I think the stock market has rallied on the perception that we're not going to have a recession after all, and that technological innovations could be a very important stimulus to the U.S. economy.
Okay, all right, Ed, we leave it at that. Thanks a lot for stopping by and speaking to us at CNBC-TV18. Of course, for our own markets, the bulls have come back in a big way. We are at the cusp of new highs. So looks like today could be that day. Whether we hold on to that, of course, time will tell. But for now, the optimism is real and the momentum has been intact. So let's do one thing. Let's take a quick break. On the other side of the break, we'll have our entire research team joining in to help us prep for what could be a very important day of trade. Stay tuned.
ये स्नैक्स एंजॉय करने का नया तरीका है, स्मार्ट तरीका है। पर आपको पता है और क्या स्मार्ट है? इन्वेस्टिंग ऑन एंजल वन, जीरो ब्रोकरेज एंड फुल कन्वीनियंस। अब तो मैं सिर्फ फूड शेयर करता हूँ, ब्रोकरेज नहीं।
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.
This car's electric for more reasons than just being woke.
Oh yeah.
And man, the money it saves you is no joke. It's got enough range to get you anywhere!
And it's the go-to park when you get there.
The all-new MG Comet EV, the no-nonsense car.
Because just like us, this car cuts the crap, man.
इंश्योरेंस कोई आरओआई नहीं है। एमएफ ईयर चेक कर, हाई होगा। क्या है?
आप बीपी चेक कीजिए, हाई होगा। हाई बीपी से सीकेडी हो सकता है और उसके ट्रीटमेंट से आपका टोटल लाइफ सेविंग्स खत्म। एसएचआई ले लो।
एसएचआई
स्टार हेल्थ इंश्योरेंस। अपनी सेविंग्स को बचाइए स्टार हेल्थ इंश्योरेंस के साथ, द हेल्थ इंश्योरेंस स्पेशलिस्ट।
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell. Right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Okay, we begin our day with some really strong cues under our belt, and looks like the SGX Nifty is also indicating that the start will be well in the green, buying both from FIs and DIs. So lots to ponder over this morning for the bulls. But let's get it down to individual stocks now. ONGC is the first stock on our radar. Post numbers didn't look that inspiring, but Sonal is best placed to tell us more. Sonal, hi, good morning.
Good morning, Sonia. Well, ONGC reported a big one-time loss, and that's why it reported a loss this time around versus an expectation of a 10,984 crore rupee profit. This one-time loss is around 9,235 crore rupees. They accounted for it for a tax dispute between 2016 and 2022. Other than this also, other than the bottom line, even operationally the numbers were weak. So running you through them, revenues, they were down 6% on a quarter-on-quarter basis. EBITDA was down 20% to come in at 16,340 crore rupees versus a poll of 20,561 crore rupees. Margins contracted to 45% versus 53%, and losses came in at 248 crore rupees because of that one-time loss versus a profit of 11,045 crore rupees. Now their other operating expenditure was up 28% YY, up 36% sequentially, and that is something which compressed the margins as well this time around. So not looking so good for the numbers operationally, and one-time loss on the bottom line also could lead to the stock being in red today.
Okay, thanks a lot for that, Sonal. Well, Ekta joins us to run us through a couple of other numbers, Oro Pharma as well as Sun Pharma. Morning, Ekta.
Thanks for that. Well, for Aurobindo, it was a largely inline set of numbers. Revenue was up 11-odd%. Street was anticipating a 10% growth. Margins 15.5% versus estimates of 15%. Profit 506-odd crores, largely in line with estimates. US sales $370 million versus estimates of anywhere between $370 to $380 million. Injectable revenue was a tad lower than estimates, but nothing too surprising. $72 million versus estimates of $74 million. But other markets also did well. Europe was up around 7.7% year-on-year. API was up around 11.4% year-on-year. Based on these numbers, I expect the stock to be in the green. But do remember, they have their conference call at 8:30 a.m. So more details then. Sun Pharma, possibly maybe a mild red. There was news post the conference call that the company is going to be acquiring Taro Pharma for $38 per share in an all-cash deal. It is expected to be a premium of 41% of the closing price in the last 60-odd days of the average of it. The outflow is likely to be around $300 million for Sun. They will probably look to delist Taro if it goes through. And Taro, remember, has around $1 billion of cash on books, so they would have access to that cash. Separately, company says that they are expecting high single-digit top-line growth for FY23. All businesses are positioned for growth. There is a marginal reduction in terms of the EPS estimates going forward from a couple of brokerages. They haven't really changed their calls or their target prices on Sun. Just expecting a mild red because of the variations from the brokerages, as well as possibly on the news that this about Taro, which came out post the conference call by the company.
Okay.
All right. Ekta, thanks very much. We'll keep an eye on all those names, but let's move on and look at BHEL earnings as well. Vivek is standing by with how it looked. Vivek, hi, morning.
Well, good morning. Capital goods major BHEL, slightly soft Q4 as far as the company was concerned. Revenues higher by 2% on a year-on-year basis. However, the EBITDA disappointed, down almost 14.5%. Margins contracted over 200 basis points for Q4. Profitability on the back of that was down 33%. Now, interestingly, what's actually happened is that in the conference call, the management gave more details. So the order book, is quite steady at over 91,000 crore. Fourth quarter order inflow too was quite steady at over 5,700 crore. Now, interestingly, a lot of analysts quizzed the management about how profitable the latest L2 bid that the company gave as far as the Vande Bharat train sets were concerned. So now what the management has said is they've gone ahead and divided this particular order inflow that they've got from Vande Bharat into two segments. One is the actual delivery, and the other one is the operation and maintenance part. As far as the delivery of the train sets are concerned, what they've said is that margins over there are going to be challenging, and this is a slight negative as far as BHEL is concerned, because they were forced to go ahead and bid lower to match the L1 bid. Now, other than that, what the company is saying is that in the core business of power segment, they are favorably placed in almost 3.7 gigawatts worth of order. So some positive as far as the core business itself is concerned.
Okay, thanks a lot for that. So we'll watch out for BHEL. But a couple of banks came out with numbers. Post-market hours, there was Karnataka Bank, City Union Bank. Abhishek has the fine print for us. Abhishek, over to you.
Sonia, Karnataka Bank surprised on the negative side as their slippages increased by almost 56% quarter-on-quarter. So the annualized slippage ratio is at 3.92% for the quarter when compared to 2.4% in the previous quarter. Asset quality has improved because recovery and upgrades have been strong and write-offs continue to remain elevated. The restructured book has seen just a slight decrease, 30 basis point decrease to 5.34% of the loans. Net interest margin is at 22-quarter high of 3.87%. However, the advances growth at 5.6% YOY is the weakest growth that you are seeing in last 5 quarters, and a decline of 4.1% quarter-on-quarter is the highest decline that you are seeing in last 11 quarters. So weak set of numbers coming in from Karnataka Bank. City Union Bank, the quarterly net interest margin is at 21-quarter low of 3.65%, and the yearly net interest margin is at 7-year low of about 3.89%. So the net interest margin has weighed on the performance of City Union Bank. Asset quality has improved. Gross NPA ratio is down to 4.37% when compared to 4.62% in the previous quarter. The advances growth is weak, 6.7% YOY. So 7-quarter low in terms of YOY growth rate that you are seeing, and they are losing market share both YOY and quarter-on-quarter. The net interest income is up 2.7% YOY, and it is down 7.5% quarter-on-quarter. The PAT is aided by lower provisions. Back to you.
Okay, thanks a lot for that, Abhishek. Well, ICICI Lombard as well will be in focus, as ICICI Bank could be looking to up its stake post a recent disclosure on the exchanges. Surbi joins us to run us through a quick analysis on that. Surbi?
ICICI Lombard will be in focus today, and that is because ICICI Bank's board has now approved increasing stake in Lombard by 4% in multiple tranches. They also said that they will acquire at least 2.5% of the 4% stake before September 9th, 2024. Now, just to give you some context on this, ICICI Bank currently holds 48% stake in ICICI Lombard, and post the merger with Bharti AXA, ICICI Bank had to bring down the stake in ICICI Lombard to 30%, and that was before September of 2024. But earlier in April, RBI had allowed HDFC and HDFC Bank, the merged entity, to hold more than 50% stake in HDFC Life, thereby creating a precedent. Now, following which, all eyes were on ICICI Bank to whether they will increase the stake in Lombard to above 50% or bring it down to 30%. Now that they have announced that they will bring it above 50%, the overhang of the stake sale is now behind them, and it's a big positive for ICICI Lombard.
Okay, well, we'll keep an eye out on that name. Surabhi, thanks very much for that. TCI Express reported numbers as well. Mangalam has got more details. Mangalam, morning.
Well, those were soft numbers coming in from TCI Express. In fact, because of the fourth quarter numbers, the company's gone ahead and missed their FY23 guidance on both revenue as well as margins as well. So just to run you through the numbers, 9.5% jump in their revenue, so came in at around 326 crores. The EBITDA actually grew a clip slower than the revenue, so just about 8% jump in their EBITDA. That meant the margins actually compressed by about 20 basis points. And we saw the net profit grow by about 7% as well. 38.5 crores compares with 35.9 crores itself. For FY23, the company's reported a revenue growth of around 15%, and this is lower than their 16 to 17% target. They also had a margin target of close to around 17.5 to 18%, and that this year has been around 15.7%. But the big trigger for them will be the fact that they are on a capex overdrive. In fact, last year itself, they did a capex of close to around 125 odd crores. And new businesses that they've opened, which is cold chain and rail logistics, etc., they're targeting the share of new business to be around 25% from about 15% itself. The stock has corrected about 30% from its highs. So let's see whether at lower levels there would be buyers for TCI Express or not.
Okay, thanks for that. Well, Chandar Agarwal, who is the Managing Director at TCI Express, will be joining us shortly to discuss more on their Q4 performance. So you'd want to perhaps stay tuned for that. It has been one of the strongest stocks, created a lot of wealth for investors over the last many years, but this time around a bit on the softer side. But PFC and Sundaram Finance were a couple of other stocks that came out with their numbers. Abhishek is here to give us the lowdown on that. Abhishek, over to you.
Well, Sonia, to begin with PFC, the FY23 net interest margin was at 3.36%. This compares to about 3.55% in this last year. And also the spreads have declined on a YY basis to 2.53% when compared to 2.85% in FY22. So asset quality has seen improvement. The business momentum is really strong. Disbursements are up 133% YOY and about 54% sequentially. AUM growth is about 13.2% YOY and 7.5% sequentially. So NII, it's a bit of soft movement that you are seeing because the cost of funds has weighed on the performance. However, lower provisions have meant that the PAT is up 16.2% quarter on quarter. Now, Sundaram Finance has surprised with weaker than peer results. So disbursements have declined by 5.3% quarter on quarter. It's the only CV financer to see a disbursements decline on a sequential basis when compared to others like Shriram Finance or Chola. So AUM growth is the weakest amongst the peers at just about 3% quarter on quarter, while the peers are growing anywhere between 5% to 10% on a sequential basis. Calculation shows that the net interest margin has declined YOY and quarter on quarter. The net interest income has grown by 5.1% YOY and it's down about 2% sequentially. The PAT, however, is almost flat on a YOY basis and up about 30.4% quarter on quarter. The heartening point in the result was the improvement in asset quality. Back to you.
Okay, thanks. That's a very exhaustive list of, how Sundaram Finance performed. We'll also be speaking with the management at 9:30 a.m. today to discuss their quarterly performance. So you'd want to perhaps stay tuned for that. Rajiv Lochan, the MD of the company, will be joining in. So here's a quick recap in case you missed out on any stocks with positive news flow. There's Aurobindo Pharma, ICICI Lombard and PFC, while stocks with negative news flow, ONGC, Sun Pharma, BHEL, Karnataka Bank, City Union Bank, TCI Express and Sundaram Finance. Let's take a quick break. On the other side, Prakash Diwan will be joining in. He has some fundamental stock analysis for us. As we told you earlier, Chandar Agarwal of TCI Express will also be joining in to talk about their Q4 numbers. Stay tuned.
It's okay for us to nod for everything, because we are parrots. Yes. But your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Dadu.
Yes?
What does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops.
But Dad, this time even if the petrol is over, our car won't stop.
How come?
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
That means our journey of happiness will continue non-stop.
LIC, हर पल आपके साथ. CNG is good,
But to get something, you have to give up something.
OMG! It's CNG!
Big boot, big appeal, big reaction. OMG! It's the Altroz ICNG.
Welcome back. We have lots of stocks to talk about and of course a market that's rollicking right now. So let's welcome Prakash Diwan on board to tell us how he's looking at the market. Prakash, hi, good morning and thanks for joining in. We're at the cusp of all-time highs and it's a big breakout here. So let me ask you about individual stocks. I wanted your thoughts on M&M because, you know, the numbers came in last week. But in the conference call, the management was very confident that they can scale up further both in the auto and the tractor businesses. And, you know, in tractors, despite being at 41% market share, they said there is scope for further growth because of the upgraded Swaraj tractors, etc. At this price, how does the risk-reward look for M&M now?
Good morning, Surya. So I can understand why the management would have to sound very confident and, you know, confidence within the people on the street for the simple reason that at this stage that M&M is, and it's been an outperformer for the last year and a half as compared to other peers. You know, all three flanks that it operates on, so for example, the SUV segment, the SUV portfolio, it's something that Maruti is challenging big time and then trying to build market share from where they were not present. You have the likes of Kia and they will continue to kind of nibble on the toes and increase market share. On the electric portfolio, you've got Tata Motors getting its act together with many more price points and variants available now as compared to what M&M has been able to roll out. And of course, Escorts Kubota is a different animal and a, you know, full rejuvenated entity that's willing to take on the fight head on. So, you know, M&M has to have some sort of a strategy to counter all these three flanks. Unless it does that and starts seeing, you know, we start seeing incremental gains in each of these segments, it's going to be a stock that will always get questioned at current valuations. Now, not that, you know, it's expensive as compared to its historic trend, but what happens is the sum of parts has still a huge component of other businesses when you buy the stock. So the auto segment is something which will need to kind of rev up. So I would believe you ask the right question, what the risk reward? Out here, I think it's a time correction or a consolidation phase that you are staring at. There could be some time before it starts hitting a leg up on the reward side. So, and the risk would continue to be slightly higher till then, and that could go on to 2 quarters. So, yeah, I mean, it's in a precarious situation at the moment, but the management confidence definitely will help. And if they don't make any unforced errors, probably you'll sell.
Prakash, hi, good morning. 2 names I want your thoughts on. Friday was such a kind of participatory day, right? I mean, so many stocks from the broader market doing so well. Really has broadened out over the last many weeks. So coming on Z, Prakash, 7% higher on Friday. So much excitement between this 180 to 200 and then disappointment, then it comes down. What's your sense on Z here? And second, if you can comment on InfoEdge, which saw a very sharp move. The IT hiring is still weak, but non-IT seems to be firing. Go on.
Yeah, thanks, Prashant. So we did miss you on Friday. There was a lot of action, stock-specific action. But, you know, I think, and let me take the InfoEdge question first, because when the numbers came out, there seemed to be a bit of a disappointment that they've not seen growth come back. But what is very heartening, and that's what the market kind of belatedly reacted to, is the fact that the margin, the way they've been able to maintain margins from other verticals, apart from the IT vertical, is very encouraging. Now, look at what's happening to a market as well. IT is no more, you know, the prima donna as a segment, which it was, let's say, about a year and a half back when we saw digitization make a, you know, solid comeback. But right now it's banking, it's allied services, the financials services sector. You've got manufacturing doing so well. So there are other sectors that have started contributing. And the more capex that you see will always be correlated to the kind of business that Naukri will continue to get. So I'm quite confident that they will be able to do well. And if IT starts contributing, you actually have a twin engine kind of a growth. So quite positive on it. In fact, that was the opportunity. The dip was the opportunity to buy into it. And on Z, Prashant is very clear. there have been so many slips, and this was a distraction that came out of nowhere, and then it just, people started assuming this would derail the process of integration with the merger with Sony. But it looks like now it's a defined time-bound thing which will happen, event which will happen. But there could still be some hiccups along the way. So that's exactly why people don't want to take very long position from a medium-term perspective, and it's fairly short-term and then approach. But I think closer to the fructification of the merger is when the stock will start seeing a huge interest. At this point in time, it's just a little bit of a peripheral accumulation that most people have done because it was available at a lower level, and this order that came through from the NCLT was something which kind of puts to rest that the process will take its normal course of furtherance. So yeah, you'll have to give it time, as I said on Friday.
Okay, all right, Prakash, thanks for that. Just request you to stay with us. We have request our first corporate to come on the show. It was a soft quarter coming in for TCI Express as they witnessed some kind of weakness in growth in quarter 4. The company missed their FY23 guidance as well by a wee bit, both on the revenues and on the margin aspect. We have Mr. Chandar Agarwal, the MD at TCI Express, who joins us on the show. Hi, Chandar. Good morning. Thanks so much for joining in. Well, it seems that quarter 4 was a little bit softish. Could you explain that to us? Why did that take place? And also, for FY24, what kind of a growth are you looking at on the top line and margin guidance as well? Chandar, I think you're on mute, so let's unmute yourself.
Q4 was not as weak as we had expected, and we did achieve an all-time top line and bottom line also. It's something which we have to look at the fact that the economy had also kind of like not really picked up, and we relied on the growth of the economy. So financial year 24 is going to be about close to top line growth of 15 to 16%, and which will again be in line to the economic growth, and the profitability will also be around 25 to 30%.
Okay.
On margins, what would that mean then? Last year you did around 15.5 to 16% on margins. For this year, what is the band you're guiding at?
No, we closed, so we were looking at about almost like 25 to 28% for sure.
Okay, 25 to 28%.
Yeah, back to the original guidance before 23 that we have been giving.
Okay, got that. So 25 to 28% is on the margins, and 15 to 16% top line growth is what you're expecting for FY24. Got that. Chandar, hi, good morning. This is Sonia here. So you had a capex target of about 500 crores, right, between 2023 and 2027. I think in FY23 you incurred capex of 125 crores, which means that there could be a lot more coming. Tell us a little bit about that, because you've purchased some land as well in Kolkata. What is the capex plan for FY24, and what would this do to your overall capacity? How much do you plan to grow it by?
Sure. So we did the automation in our Gurgaon project, and now we are on the verge of finalization of our automation in the Pune project. And then last year in 23, we spent about 125 crores. And this year we intend to spend about the same. So besides the building the purchase of the land, we will also be looking at building the sorting centers and automating them. Considering all the the locations that we have in the pipeline, like Calcutta, Chennai, Bombay, we would be, the capex cycle will continue as it is.
So what would this mean for a compounded growth in the top line, say, over the next couple of years? I mean, 15-16% is what you're looking at in FY24, but expecting this capex to come through, the automation to go through in the Pune project as well, what would this mean for, compounded growth over the next couple of years?
So definitely, it would again depend a lot on the economy, how it is, because next year we have the elections, and I'm not sure how things will, turn out to be going forward. So it'll be kind of premature to say anything at this point. But of course, we will maintain our leadership in the B2B express trucking business.
Chandra, hi, good morning. I mean, we've got the numbers in terms of guidance from you for 24. So, two things. Briefly, talk to us a little bit about qualitatively what you're saying, because you referred to the economy a few times, and you plugged into SMEs like very few other logistics businesses. What's the overall feel that you're getting, what you're hearing? Are things at the margin strengthening? Are they kind of a little dull at the moment? That is one. And, some of these, what you identify as new businesses, how are they going to do in 24 and beyond?
So, the MSMEs have played a very important role in our overall growth and top line, and always they have been, and profitability especially. So I do not see I have not seen any sort of like discouragement from that side or any sort of slowdown. That's quite strong. And going forward also, I do not see any much challenges. Yeah.
All right. Chandra, just to clarify that point, the top line growth you're guiding for mid-teens, and you're talking about the 25 to 28% is the absolute EBITDA growth, not the EBITDA
Correct.
margin, right?
Right.
All right. Just wanted to clear the air.
Yes, that's right.
And EBITDA margins will start moving. I think for 2025, we're talking about moving towards 20%. So in this year, in all probability, the margins will start improving. We just want to clear that point for our viewers as well. Okay. All right. New businesses, you were guiding that it will contribute close to around 25% of revenues. As of last count, what is that number? Could you tell us? And also e-commerce volumes, what was it in the past year?
We've already grown. It's already about almost 12% of our top line, in the businesses. And e-commerce, again, it's not at all. It was a degrowth business anyway in 23. So,
Yes.
We do not have any large investments or any foothold in that, and we will stay away from that.
Okay, all right. We will let you go on that note. Thanks a lot for joining in, and all the best for the quarters to come. Appreciate your thoughts on CNBC-TV18. Well, that's the word coming in from TCI Express. They're expecting a 15 to 16% revenue growth in FY24, and they say, of course, depending on which way GDP growth goes, they'll move in tandem with that as well. But let's slip into a quick break. On the other side of the break, it's all set to be a big bang market, so Anuj Singhal will be joining in for a quick trade setup. Post that, we'll also bring you the top stock picks for the day from our technical and F&O experts. Stay tuned.
That's the boss's cabin. The canteen is behind. Good morning, ma'am. Good morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
We don't just create new standards. We create new priorities for the Indian car buyer. In fact, we make the whole world of India's mobility new forever.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से, नहीं?
आपको नहीं तो
कोई बात नहीं मूर्ति, गलतियां होती रहती हैं, कोई जरूरत नहीं है चेक करने। नहीं मूर्ति, कोई फायदा नहीं, कोई जरूरत नहीं।
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Okay, welcome back. There's 14 minutes to go for the the pre-open session. Anuj is here in our studios with how he's looking at things. Anuj, hi, morning.
Morning, Prashant, Sonia, Nigel. Well, there are certain days when I have my own theories. Like on Friday, we spoke about the fact that Mumbai rains means green for the market. I think today my theory is that when everything looks so good, to take your money off the table. As simple as that. By the way, buy in May and go away has worked once again. The adage is sell in May and go away, but it's actually buy in May and go away, which normally works for the market. And now this debt ceiling agreement is likely to lead to a global market party, and we are going to participate. The Bank Nifty and mid-cap set to open at new high. Nifty is going to get very close to all-time high. but today could be a good day to take some profit, even though the uptrend is intact and the Nifty might over the next few days or next few weeks start a fresh uptrend towards 20,000. But this particular move might be coming close to a bit of a maturity. That's my sense. Also, I do feel that the global market might be having some kind of premature celebration on this debt deal because the inflation is still very high and economy is still very strong. So there's a risk of this rally getting sold into in the US itself. Of course, our market's moving in its own on its own pace. Other thing is that the mid caps are rallying. This rally is a good opportunity to actually repair your portfolio, exit poor stocks, and perhaps raise some cash levels. On the Nifty, as I said, today's trade is to just book profit and step aside. There's no point chasing the last 100, 150 point on the Nifty. You had a 180 point rally on Friday, and there's a good chance that you open another 150, 160 point up today. After that, there's not much left on the table. So 18,650 to 18,700 is the profit-taking zone. Unlikely that you get too much intraday. Bank Nifty could be very interesting because it's set to zoom in open after 6 days of consolidation. And the conviction that we had of a new high and even 45,000 at some point in May, it's coming true now. But again, 44,550 to 44,750 should be the zone in which you should take some profit and leave the last 200, 250 points for someone else. Again, this is not an indication that the market is going to collapse from here, but this particular move might be maturing and you'd be better off taking some money off and stepping aside.
When did it change from sell in May and go away to buy in May and go away? I completely missed that.
Always was, Sonia. May has been, unfortunately, because of a couple of months of May, I think in 2004 or 2006, I think there have been a couple of instances in May when the markets collapsed, and that's why it's become sell in May and go away. Otherwise, May,
on an average,
this year, May has been the best month. And I say that because look at what the mid-cap index has done in the month of May. Look at what small-cap index has done. I mean, you look at your mutual fund, your ETFs and all, you would have seen a big repairment happening in the month of May. I mean, this is the mid-cap index. Fabulous month. And more often than not, May actually has been like that. It's just that, those 2-3 months, those 2-3 years where there have been Black Mondays and Black Fridays, it's become like that.
And what's the adage for June?
Well, I think in June you book profit. In June you book profit because you had 2 back-to-back strong months. Yeah, I think profit booking won't hurt.
Okay, all right. Anuj, thanks a lot for that. Have a good day and a good week as well. We'll see you again tomorrow. But for now, Mitesh Thakkar, Sudarshan Sukhani join in to tell us what they're feeling about the market. Gentlemen, morning to both of you. Sudarshan, how are you feeling? We're at the cusp of new highs. Do you also believe that perhaps it's time to take profits, or should you just ride this wave because there's more to come on the upside?
Good morning, Sonia. See, the market goes into a trading range and breaks out, and then eventually again goes into a trading range. So today we are going to see a continuation of Friday's breakout. This is a very good time to take profits and step aside because sooner, not later, sooner we are going to enter into a trading range once again, and multiple buying opportunities will come once we enter a range. Now, I can't predict at the levels, but the range is the best time to buy because then you can buy on dips. So if you are long, and you should be long, I have been talking about being long for days, weeks perhaps, take profits off, again re-enter when a range starts developing. I'm not so upbeat on the Bank Nifty after the big gap up that is expected. I would say that it's best to stay away from that index.
Okay, Mitesh, what about you? How are you looking at things?
So we've had, talked about getting long on the Nifty and waiting for a breakout on the Bank Nifty. I think the Bank Nifty could get past 44,150 today. If that happens, I think, we'll possibly add on to long positions on the Bank Nifty. And as long as it's above 44,050, good chance that we are looking at 44,500 as the immediate target and 44,950, 45,000 as the near-term target. So we will possibly now look to explore getting long on the financial sector, the banking index, as well as banking stocks. And maybe, you will see with this breakout, banks either outperform. In case the breakout fails, then you get out with minor losses. I think that's the way we'll approach the markets.
All right. Good morning, gentlemen. Mitesh, what about individual picks?
Yeah. On the stock side, I have all buy calls today. In fact, I have good sectoral representation as well. So I have a buy on Axis Bank to begin with. Here, I would recommend taking long positions with a stop placed just below levels of 915 for targets of 950. Marico is a buy with a stop at 537.5 for targets of 562. Deepak Nitrate had a good breakout on Wednesday last week and then was consolidating. Now should participate. So that's a buy with a stop at 2050 for targets of 2150. And HCL Tech is a buy with a stop at 1125 for targets of 1175.
And Sudarshan, what about you?
Well, Can Bank is a buy, and it's not related to the Bank Nifty because it had a small correction and is probably resuming its up move. So that's a buy with a stop under 295. That big company, Reliance, is a buying opportunity. It had a very good day on Friday. That should continue, and perhaps that is exactly what would support the Nifty. After the gap up, I very much doubt if anything else could. So Reliance is a buy with a stop under 2400. Biocon is an intraday short. The small rally we saw was probably a bear market rally, and it should resume its downtrend. Shell with an intraday short with a stop up of 242. And Coal India has been going up step by step, consolidates, goes up, consolidates again, and it's on the verge of breaking out. So Coal India is a buy with a stop under 236.
Okay, thanks a lot, gentlemen, for that. Sudarshan and Mitesh, have a good day. Well, let's welcome Sneha Seth. She's our F&O expert for the day. She joins in from Angel One. Sneha, hi, good morning. Do you see more momentum in the market? And if yes, what are the levels to watch? Also, what are the stocks that you like?
Very good morning, Sonia. If you see the market, we have seen a decent up move recently, and along with that, we are seeing decent long addition in case of future segment. Like if you see Nifty, we have seen open interest addition of 10% on Friday. We are seeing decent long. In fact, FIs also have long rolled over their long positions, and then long short ratio is around 62, which is very good. After quite some time, we are seeing the rollovers in front of FIs, which is very nice. So I believe the momentum should continue. Upside, we can head towards 18,600, 18,700 immediately. And on the banking index, if we see 44, 100, 200, that will be the immediate resistance. But looking at the momentum recently and the kind of opening we will have today, I think we may surpass those levels. So it is a buy on dip kind of a market, and we should go ahead and trade with a positive bias. In individual counters, I'm liking Canara Bank. Canara Bank, I would suggest, if you see recently, this counter has been recovering from the supports of 290.95, and it has been sustaining above the 89 EMA also. So I believe this counter is a buy at present. We would suggest buying in options, 310 call option in the range of 910. And the stop loss will be around 4.75. Target will be around 17. Apart from this, we are also liking Jubilant Food, when this counter has been going up with a decent volumes recently, and it is again trading above the 89 EMA. So I believe this counter is again a buy for us. 480 call option we would suggest buying in the range of 17, 18. Stop loss would be maintained around 9.75, and the target will be around 29.5.
All right. Thanks a lot, Sneha, for that. Appreciate your thoughts. That's Angel One with their views in the F&O market. Let's take a quick break. On the other side, we'll have the pre-opening rates. We will also have Nadadur Srinivasan of eClerx to talk about their Q4 performance. So a quick call lined up with them in just a bit.